Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS Accountants Minute podcast. Plan, predict, perform advisory services that drives growth for your SME clients. This is the article that we've drafted for Accountants Minute, which basically embraces a significant amount of the resources that are available within the ESS BIZTOOLS financial forecasting product package, which is our prime product package within ESS BIZTOOLS. Business plans are like maps for tourists. If you don't know where you're going, how are you going to monitor your progress? Is the comment that I think is very applicable when we start looking at the planning process for our clients. How do you undertake business plans for your clients? Do you undertake them? They are very important. And in this new age of accounting, whereby SMEs are undertaking to commit time and resources to assisting SME clients to enhance their business operations, I think the planning process is very important and hasn't suddenly become important. It's always been important. But unfortunately, as a profession, I don't think we've given enough credibility, enough input, enough exposure to the benefits of planning to your clients. We now have that opportunity because the technology allows us to do so, and the accountants need to look at changing some of the services, don't you? Because of changes within the processing by the tax office and processes that are going to be changed by AI. So it all starts with undertaking an SME needs analysis. I think you need to sit down and talk to your client and understand what's really worrying them. And then you can plan how you're going to approach a business planning assignment to make sure that those key issues, which are causing your client to wake up at 3 a.m. worrying about them, will be given a high priority, because that will help him or her to really accept the legitimacy of a business plan being prepared for them. The SME Needs Analysis, which is a key document included within ESS BIZTOOLS, because there is this ongoing challenge for a lot of accountants and bookkeepers to establish in your client's mind that you can give them advice on a broader range of commercial matters and financial matters and management accounting matters that they haven't seen you perform before in many cases, because your priority has been the preparation of the tax return. Now, the tax return does not help your clients run their businesses. We're not going to mention tax again after this comment in this podcast, but we're going to be covering vital issues that will help your client to survive and hopefully thrive in these difficult circumstances which we have at present. Survive and thrive should be the key of what we're trying to achieve. It's important that you sit down and have a think tank meeting with your client, the CEO, the owner of the business, before you start the process with the broader leadership team. And that's where the SME Needs Analysis ideas can be discussed, so you can clearly identify the key issues that's worrying the CEO or the owner of the business. so that they can get their minds around this business planning process. We then move into the how do you go about doing a business plan? In ESS BIZTOOLS, we've got a detailed series of checklists. There's about 45 of them, covering a wide range of issues relative to the preparation of a business plan. I'm going to cover a couple of them, or a few of them, so you can get an idea what I'm talking about. What's the strengths, weaknesses, opportunities, and threats? And we have a checklist for you to work your way through to make sure you're covering all of the issues. What's the history of the business? I think it's very good to know what the history is, especially if this business has been passed down through generations of a family or was acquired from someone else. It's great to know what the birthday of the business is so you can have a special promotion, and who worked for the business has now become famous. Maybe you can promote that person and that association with that person. They know the history of the business. Leadership is vital. Now, the next group of people you're going to be talking to is the leadership team in this development of a business plan. But it's a good idea to make sure that you understand the leadership structure within the business, understand what the CEO's take is on the various members of the leadership team, who he's happy with, who he's not happy with, what their duties and responsibilities are. Get them from the owner or the CEO first, so that when you're in the planning process, you know what that person is supposed to be responsible for. And it might be interesting to hear what they start talking about. Maybe they avoid everything that they're responsible for. Well, that might raise an issue that you need to give further consideration to and have a discussion with that person, and perhaps with the CEO. What about the team? How are the team trained? How are they motivated? How often do they have meetings? And it's an important point, meetings. How often does the leadership team have meetings? The rhythm of meetings is very important for every business. And this is part of the process in the business plan determination. What are the resources of the business? Are all the resources available, or is there new activities that should be implemented? Who are the clients? Are the clients happy? Or are they just dealing with this business because no one else has got those products or services available? What additional services or products could be sold to those supporters of the business, those clients? What about the supplies? Where do they come from? Are they coming from overseas? And if so, is there shipping delay problems because of the unfortunate wars that have been fought around the world, or all sorts of trade impositions being imposed that are changing the way various countries transact business relationships? Is that going to mean that there's a delay in receiving products or raw materials by your client that could cause the need to have higher levels of inventory? That all costs money, doesn't it? The supplier is still going to want to get paid, and your client will perhaps be looking at, instead of holding 6 weeks raw materials, they need to hold 3 or 4 months of raw materials. That's a cash flow consideration that we'll talk about a little bit later. There's other issues concerning competitors. As your clients sat down and thought about a strategy on competitors. So you'd be working through all of these items, and there's a lot of others in our 45 checklists of these individual items to make sure that there's been thought given to this process. I prepared hundreds of business plans for SMEs, and I found the best way to go about it is in a series of meetings. The first meetings are really an awareness meeting. Some of these executives have never participated in this type of process because how many accountants deliver it? And not many owners of or CEOs of small, medium enterprise businesses go ahead and undertake a planning process themselves. They really need assistance. Even in public companies, the chief financial officer tends to be the coordinator, the key person involved in the preparation of the business plan document. The CEO gets involved but really doesn't drive the process. And that's why I think it's an ideal role for you to perform for your clients. But you need to be appreciative that a number of the leadership team members may never have gone through this process before. Therefore, you need to just go a little bit slowly and work your way through it. So the first meeting is really a discussion point to explain to them how you're going to go about this process, to introduce them to these checklists that they're going to need to review. And I'd be handing them to them in batches before the next meeting so they can start writing with provision where they can write their answers so that when they come to the meeting, their brain's in gear. It's thinking about these issues. They have been thinking about them for a few days now because you've raised it with them. They understand what the key items are that are going to be discussed. And I found the process for a planning meeting best undertaken is relative short bursts, bit over an hour, say an hour and a quarter, and have a break, let them get up and walk around, have a smoke if they need to smoke, have a cup of tea or coffee, and then reconvene, and probably a 3 to 4 hour maximum because all executives are thinking about what's going on outside or back at their offices when they're in this meeting. Now, that might not be practical if your executives, leadership team of your client are scattered all over the state and they've been brought into one place for these discussions. In that case, the client will want this process to be completed as soon as possible. So you might be having 1 or 2 days on this process. So you need to have it mapped out. And I think you would find it's very beneficial if you've distributed the agenda and the key questionnaires on a whole range of issues that I just started talking about some of them beforehand, so they know what's coming up. They've got an idea of what's going to be discussed. So that process is to have that series of meetings, encourage discussion, encourage debate. But your role is not to be the author of the business plan. I think your role is to be the coordinator of the business plan, to raise questions, to get them to reach a consensus, and for you to record that consensus and then embed it all within the business plan, draft document. Because it's very important that the leadership team has ownership of the business plan if it's going to succeed. We don't want them sitting back and saying, oh, Peter Towers, our accountant, prepared this, and we didn't really know what he was talking about. That won't work. You have to gain endorsement from the leadership team. So that's why there should be some debate. They shouldn't be just you submit and this is it, and basically having them rubber stamp it. And most leadership teams that I've come across wouldn't rubber stamp it in any case. But please don't go down that path. I know some people have prepared business plans like that in the past. I don't agree with it. That's why this process of meeting with the leadership team, getting their commitment to it, is vital if this document is going to be anything more than something that's lying in the bottom drawer with dust over it that no one's ever looked at. This has got to be a working document that's referred to each month, because there's going to be an action plan. You won't resolve everything on day one. It may take 12 months to work through the action plan. So it needs to be looked at every month at least. It needs to be in a live document. So we then move into the prediction side of things. Now, the predictive financial accounts is the financial interpretation of what's in the business plan. So you can sit down and start going through it. Now, you need the data for what is the current position, what is the debtor's balance, what is the amount of money invested in various inventories, raw materials, completed stock, and there could be others at this stage. What's the planning on capital expenditure? What do the budgets say? You need all that basic information. But you need to also be reading the business plan to see that the concept is to open a new operation in 2 months' time, and the expected turnover is whatever the figure is, and the documents have been signed to lease the premises, but they'll need a basic level of inventory in that store. It might be $100,000 worth of inventory. That's got to be funded from somewhere. Or it could be that the business plan's identified a major research and development project, and the research and development application to the board of directors has already been processed, and that's indicated a budget estimate of $250,000 over the next 12 months. That has to be funded and included in the predictive financial account reports. So there's these items that are identified in the business plan that need to be clearly identified in the budgets and cash flow forecasts. And that's why I stress to you that the business plan is the first document to be started in this process. And when it's that final business plan document is finished, we then have the budgets and the cash flows prepared, which is looking at budgets for each business activity. If your client has 10 different activities, please prepare the budgets individually. There is nothing worse than everything being consolidated, because what you're wanting is a set of documents which will enable you to find out a problem, to find out why a certain results occurred. What you don't want is a negative figure appearing in profit and loss account, and everything's been consolidated together and no one's got any idea what's caused the problem, where it is. It is far better if the whole process from the very beginning, that the budgets were prepared for each individual operation, so that you've determined what the gross profit percentage, what the turnover, what the net result should be for operation number 1, and you've done the same thing for 2, number 3, 4, and so on. Doesn't matter how many there is. And this is how public companies do it. I was the CFO, company secretary of a listed public company. We had nearly 500 operations. We had budgets for a lot of them. Took up a lot of paper, I must admit. But it made identification of problem areas a lot easier to work through. Not always finding out the real answer to the problem, of course. That might take a bit longer. But we need to be setting up the budgets in the first place so that the identification of problems is a lot easier to implement. And I'll talk more about that in a moment. So then we've got the cash flow forecasts, the projected balance sheets, and out of all that, the key performance indicators and business metrics that are expected. But then we need to do some identification. If the business plan noted that debtors days outstanding was currently 50 days, I don't think it's very realistic if someone's gone through and done the cash flow forecasts and the projections in the budgets and said, well, I think we can get it back to 32 days. On what basis? Now, I've seen this happen, especially when there's no real correlation between the business plan and the budgets and the cash flow forecast. One document saying, well, debtors days outstanding is 50. We think it should be lower, but at this stage it's 50. No one will ever convince me. You could immediately say, well, we'll achieve 32 days. It takes a long time to get down from 50 to anywhere near 32 days on debtors days outstanding. And what's the problem going to be? Well, the problem's going to be that the cash flow forecasts are wrong. And that can lead to all sorts of problems. So the directors, the leadership team sit back and say, oh, you beaut, this looks good, because the forecast's been done on 32 days. outstanding. And this is why the analysis of the key performance indicators is so important, that you need to be looking at these other figures and say, hang on. You're currently on 50. How are you going to get back to 32 days? It might be an objective to get back to 32 days, but I wouldn't be doing the budgets on them, not straight away. Maybe drop them from 50 to 48 days and then slowly start to work down. And the other area can be in creditors. So the business is currently paying creditors, such as the creditors' days outstanding sits at 40 days. And you look at the planning and listen to what proponents are saying, and they're saying, well, let's buy that out to 60 days. Is that practical? Or a major supplier is just going to say no more supplies because you're paying us too slowly? Is that a sign that there's problems? So both of these issues can cause great confusion in the cash flow forecasts. We want to make sure that they both link, they're both connected. And at the end of this process, on the argy-bargy of getting the budgets and the cash flow forecasts right, there may be some information that really needs to go back to the leadership team to say, well, we have, and when we've done the budgets and the cash flows and looked at everything else, we think there should be some changes made in the business plan. Take it back to them. Give them the courtesy that they're going to look at it, because, as I've emphasised a couple of times, the leadership team are the group that's going to ensure the implementation of this business plan. And they need to understand what's going on. And then we start looking at the next part of this, which is the performance. We've set up the foundations now. We've got the plan. We've now got the prediction. It's the performance that's very important. In our package, we advocate the 52-week business enhancement system, which is basically saying there are systems for daily, very brief, might be just a one-page report, which says, this is what happened yesterday. This was a problem we encountered yesterday. That's important. The leadership team should be made aware of it immediately. But it might have, the bank balance is this, the debtors balance is this. Oh, by the way, we owe a lot of money by the end of this week, and at this stage we haven't got it, which is the memo in effect to the leadership team to get into action about contacting customers that owe money and get them to pay it so that the company can pay its bills. The key document, I think, is the weekly performance and financial report, which should be prepared on each operation compared to the budgets. And if there are variations, an immediate inquiry is made so that whatever caused the variation. So if the expectation was that there'd be a 38% gross profit percentage and the actual is only 22%, the leadership team or the person on the leadership team responsible for that operation needs to find out why, what caused that. It could have been fraud, unfortunately. It could have been a clerical error. It could have been that someone mucked up the stock take at the end of the week and missed the whole stack of stock, and that's thrown all the figures out. It could have been a miscalculation. But the important thing is whatever caused the problem should then be fixed so that it doesn't continue to cause the problem, because no one fixes it. It could stay in the system for the rest of the financial year. You might only be in month one of the 12 months. But the problem is, if your client's relying on you as the accountant in finding these sort of problems out in the preparation of an annual set of accounts and a tax return, it might not be until 6 or 7 months after the end of the financial year that you have a discussion with the client and say, gee, your gross profit percentage was down this year. It's normally tended to be up around 36 to 38%. And this year it's down around 22, 23%. Is there a reason? Now, if there's been an error getting made in some type of the calculations, that's gone right through. In crediting terms, it's gone through to the keeper. You can't fix it up. It's gone. Could be a lot of money involved. Hasn't been picked up. And this is one of the big differences between the big end of town and small business on how these things are approached. So working through and looking at the The performance brings information to light weekly and monthly. At the end of the month, the monthly financial accounts are prepared. They're compared to budget, and a very important reconciliation is then prepared, analysing the weekly performance reports with the monthlies, because they should reconcile very close. Which means that the estimates that have been utilised, the calculations that have been made in the weekly performances were right. Why is this so important? Because the leadership team will come to rely on the weekly results, and that's what you want them to do, because the quicker they fix problems, the better for the business. And it's a lot fresher in everyone's mind. They know what happened in the last 7 days. You start trying to do that after the end of the month accounts are prepared, which is probably 2 to 3 weeks after the end of a month. And I can assure you, having looked at trying to do that on one occasion in the public company I was involved in, people have forgotten. They got no idea. Even going back a week can test some people, I can assure you. So we need to make sure we can get the feedback so that the problems are fixed. And then we have the rhythm of meetings. The rhythm of meetings are geared to make sure that there is communication. In my opinion, one of the most important meeting is the weekly review of what happened this week and what activity performed under expectations so that we can get it fixed. And then the monthly, of course, we flow through to you then preparing a report to go to the board of advice or to the board of directors, or maybe it's both if your client has got both a board of advice and then a board of directors. So this is the process of giving your clients vital information. Not all of what I've just described will be activated by your accounting firm, but you should be closely involved in the setting up of the system, especially for the daily reports, and making sure that you're on the communication trail, that you get the report, so that if you or your key person that's looking after this client observes, gee, our number of customers dropped dramatically yesterday because you've got the charts, you can immediately make the inquiry exactly like you would do if you were the employed chief financial officer of that client. Accountants and bookkeepers, your clients need an upgraded range of services to enable them to survive and hopefully thrive in 2025-26. You are the key people to supply those resources to your clients. Their businesses are not big enough or generating enough income to employ a full-time chief financial officer. But with today's technology and communications, you should be able to deliver those services. And many of your clients will be very appreciative for the services that you then start offering to them. It is a step-by-step process. It would just not boom overnight, but you'll get started because you've got to go through this process also with your team. In ESS BIZTOOLS, we have a training package for your team that is the first thing you should activate when you become a subscriber to ESS BIZTOOLS. We work through 13 modules to make sure that your team has got their heads fixed on this is the service that we're providing for our clients. And we continue to produce material, produce videos, produce a newsletter each month, which is promoting these types of services to your clients. You badge it with your name, we call it Business Plus, and you send it out to your clients. And then you follow them up a few days later and say, did you read that article on research and development, on capital raising with crowdsource funding equity raising, or with early stage innovation company, or whatever the process is? You are showing your clients that you are able to assist them to better run their businesses, as well as prepare their income tax returns and tell them about the amount of tax they got to pay. If you've got any questions, please contact us, peter@essbiztools.com.au. And don't forget, we have an end of financial year special offer for you. 50% discount on our packages, and they're clearly described on our website. Please go to www.essbiztools.com.au and click on packages and pricing, and you can view the pricing of our three major product packages. The one that I'm referring to today is the premier product. It's the financial forecasting package, which covers every product that is produced by ESS BIZTOOLS and will give you the resources to deliver the services that I have outlined to you in this conversation today. Good luck with this whole process. I think you will find many of your clients will be very appreciative. If you've got any questions, please contact me, peter@essbiztools.com.au. Have a great day. Goodbye.